Well, markets are set to close high today after some positive leading indicators and manufacturing data offset concerns about a hike in the Fed's forward rate guidance. Now we're joined by Jonathan Corpina. Jonathan, how did you interpret that turn in sentiment that we saw in today's market? Was it investors merely breathing a sigh of relief that this economic recovery really is well in train?
I think that's it. I think investors have been patient in this market so far. We've seen a lot of volatility in this market, and that just shows me uncertainty. When some investors feel like the market is selling off, they think that that might be the top, and then when we start to see a rally, they start to play catch up. I think after Ms. Yellen's comments yesterday, it takes a little time to digest the information, try to put a game plan together about what the next month, what the next quarter is going to be like, and then plan accordingly. Yes, we did get some good economic data today, which will help the market. No real major headlines have scared our market today. So I think this is just another bounce off the sell-off that we saw in previous sessions.
Okay. Now we also saw good performance from some of the bank stocks such as JP Morgan. Traders have spoken about the need to see more leadership from the financials in this rally. Is that likely after banks pass upcoming stress tests and perhaps release a bit more capital?
I think as time goes on, we've seen these stress tests before, and there are two camps, ones that believe the stress tests really show the true health of the financial institution, and the others that say, well, you know, this is all just make-believe and this is just smoke. So I think as the financial sector still rebounds from the incredible lows that we've seen over time, investors will start feeling a little bit more confident in this sector, and hopefully that will become more of a leading sector in our markets. A lot of rules and regulations have changed over time. Some new rules have become newer and more updated rules, and I think that also helps our markets. We need to make sure that we have the right rules and regulations for financial institutions that are applicable to today's markets. Okay,
now we're also swinging very much between geopolitical risk and economic data in terms of driving forces for this market. Is it really more a case of back to the latter for now that Ukraine and China seem to have subsided at least a bit?
They have subsided, and I think any of the major geopolitical headlines that we've seen over the last month or so has had an effect on our market, but not a real major effect, right? There wasn't that fear, there wasn't that panic that I've seen before in this markets when we've gotten some headlines out of China and some headlines out of Ukraine. I think we're going to go back to the basics, looking at our economic data, looking at headlines, domestic headlines. Tomorrow there is no economic data. Next week is rather light in economic data. So I think now we're going to get a real true test of how strong or weak this market is. Without that buoy there of economic data that kind of gives that sentiment in the morning, and then hopefully that sentiment stays throughout the day. Without that coming up in the next few trading sessions, we're going to really see what this market has.
Okay, thank you, Jonathan. That was Jonathan Corpina of Meridian Equity Partners, and I'm Jane Sell for The Street.